So my name's Stephen Richardson. I head our Asia offices here at Fireblocks. And what we're going to try to do is take the next 15 minutes to really ask some tough questions that maybe a lot of crypto folks have wanted to ask of banks and their ability to really compete in this space. And so with me is Rene, and just wanted to give you a chance to do a quick introduction about yourself and your work at Standard Chartered.
Yeah, thanks, Stephen. I'm Rene Michau. I look after digital assets for Standard Chartered Bank. I get to work with our ventures team, our institutional bank, and our retail bank on everything from crypto trading all the way through to central bank digital currencies and stablecoins.
Awesome. So we'll jump right into it. I was in a conversation with a large bank where the head of digital assets for that bank just said, when banks choose to come into digital assets, they will absolutely crush traditional crypto firms in payments, trading, liquidity management, market making, etc. Right? I think if you talk to a lot of crypto native folks, they'll say that's a pipe dream. And so I guess from your perspective, working at a bank, do you actually believe that banks can be disruptive in this space and compete with crypto native players that have established themselves over the last few years?
I mean, tough question straight off the bat. I love it. So I think it's really interesting where banks have had a very privileged position in the market. We're regulated. We've been well supported by infrastructure, government, market position, and all that sort of stuff traditionally. And I think it's hard to imagine a world where that wouldn't be the case. At the same time, we've got what is a fundamental change in the fabric of the way financial services can be built and are being built. So I think the challenge, it may be that there are some very successful banks that do a great job in a digital asset enabled economy. But I think it is important to recognize there's a heap of work to happen. There is a lot of cultural change, there is a lot of investment, there's a lot of learning that needs to happen and talent that needs to be acquired in order for traditional institutions to be competing in the same way as crypto native firms are. And I think that, I guess in answer to your question, I think everybody's slightly wrong in that I think the way that the ecosystem is evolving will actually mean that the business models that exist today are not actually well equipped for a fully digital asset enabled ecosystem or economy.
Yeah. But I guess, look, I think you mentioned regulation and this point of privilege that banks have by being regulated. But this explosion that we've seen in the crypto native space has come by this idea of taking risks, right? Innovation comes out of taking some level of risk.
Yep.
Right? At banks, you guys have entire teams that are built to mitigate your ability to take risks. And so if you think about new and disruptive models around business, how can a bank really operate in this space if it doesn't fit within a framework that your compliance or risk teams understand today, and therefore leaves you, I think, at a disadvantage when you're talking about competing for retail dollars or institutional dollars in the crypto space?
So, I mean, that's a really good point where we do have risk infrastructures which are designed on historical technologies, historical events that have happened in financial services and are designed to stop us from being terrible. At the same time, that can prevent us from being excellent. What is important though is two things, right? So, first of all, actually we need to learn a lot as institutions. One of the things I often say is that, if you're a banker who isn't paying attention to what's happening in digital assets and crypto, you're not too dissimilar from a doctor who's not staying abreast of medical journals, right? The big issue, I don't think the risk management is the issue as such. We've got better tools to manage risk. Our job as institutions is to manage risk, to protect our clients, to stay stable, to generate financial return. And we've got much better tools to do that when you come across digital assets and when you're looking at digital asset enabled financial products. So it's more about making sure that the teams working on that actually have the awareness and the understanding of how financial services is actually changing to be able to respond to that innovation. So I think it's, I don't see I think that there is an advantage to being unregulated and being able to experiment with things in terms of really innovating new ways of doing stuff. But turning that into products that work sustainably for institutions requires a significant amount of effective risk management. So I think it's a balance between the two, but in no way do I think that banks by their very definition, are oriented towards innovating in this way. I think that we have to work very hard to participate in this ecosystem in a way that makes sense and a way that fits with how we're regulated.
But do you think that banks actually want to work hard at doing this? I guess is the question, right? I think the challenge that at least I see is that banks in general typically tiptoe into water, right?
Yep.
Like they don't make a full and complete jump into new technology. There's lots of considerations, right? And so when you talk about, basically building that or going into that in a process-driven way, do you think that banks are actually incentivized to operate in this space?
I don't think banks are incentivized to operate in this way, and I think we are potentially looking at a almost an extinction event potentially coming up, where banks who are able to orientate and to innovate and to lean in and do things will survive, and those that can't won't. So I think it's hard to say, well, all banks aren't acting or all banks are acting. The ones that are effectively able to mobilize themselves, to challenge themselves, to do things differently and to do that precisely and take a stand and have meaningful conversations with regulators, with the ecosystem, with clients, are the ones that will end up surviving. What will happen for those that don't is the business opportunities will migrate to new infrastructure, they'll migrate to new ecosystems, and the banks will be left without deposits, they'll be left without clients, they'll be left without an ability to make money. So that's kind of the extreme downside case. So I guess one of the things we try and do from a Standard Chartered perspective is have forthright conversations, lean into the ecosystem in ways that make sense for us and our clients. We're not going to fly down to the farthest edge of innovation in crypto because it's not who we are as an institution. But we do want to lean into the ecosystem in a way that challenges what we're delivering.
Makes sense. I guess, you can look at Germany, right? And the idea that, BaFin has changed the rules around, basically issuing securities on chain, right? This idea of central security CSDs, right? And having that central registry be able to be done by any counterparty that holds a particular amount of assets. Mm-hmm. You can look at Project Guardian and things that have been announced by MAS, right? And you can see those as potentially loosening, right, of this regulatory or rigid regulatory structure to allow some level of innovation. Do you think that if that occurs or persists in the space, that it will really put banks on the back foot?
I think there's lots of things in the space that are putting banks on the back foot, right? So, but I think that what regulators are trying to do with this is banks really have a job of protecting consumers and making sure that we're dealing fairly with our clients and supporting the regulators in maintaining a stable economy. That's kind of our job.
Right.
These projects are designed to invite banks to participate in the ecosystem without diminishing that role that banks play.
Right.
Now, I do think that's constructive. I think it's really helpful. But I would suggest that perhaps more than just that is required for a bank to succeed. I don't think it will prevent. I don't think it prima facie prevents banks from participating. That is still a choice for each bank to make around how they lean in.
Yeah. So I'll get to, we at Fireblocks are a technology infrastructure company. We've built our company with 150 plus engineers and product managers, et cetera, right? Hiring, I think, some of the best and talented people in the space. Innovation actually takes having great talent.
Yep.
And the question is, when you look at banks and maybe some of the talent drain that you're seeing there, the more competitive nature of companies like Binance, Bybit, Coinbase, Fireblocks, you're competing for talent in a real way, right? Do you guys have the talent that it takes at banks to actually engage in this space in a meaningful way?
So I think that it's become increasingly challenging for banks to attract top talent.
Yeah.
And part of that is to do with the reduced speed of innovation, which you talked about before, based on focus on regulatory compliance. Part of it is that engineering is kind of quite creative and needs space to be able to be successful. It needs tools. It needs an environment that's conducive to engineering. I think every bank is grappling with that talent challenge and working really hard to solve it. But I think it's a very steep hill to climb, and I think it's a strategic risk for every financial institution in the TradFi space to attract and retain the best talent, right? We've gone from a world where in traditional finance, where technology and business were quite separate, to the point where actually, if you look at the way most crypto firms are built, engineering is central to revenue generation. And so therefore, pay, incentives, all of those things line up to the profitability of the business. And therefore, it's a much more attractive environment for very capable engineers.
Right. But look, the challenge for me is that if you guys are not able to attract or potentially working hard to get past that steep hill that you have to climb, then are we expecting too much to say that banks are really going to participate in this space in the next year or two, right? If it takes, a year or 2 years for folks to build custody infrastructure, let alone trading infrastructure or other infrastructure across the board, can we really expect that you guys will participate in a meaningful way? And, what does that mean for actually entering into the space as a whole?
Yeah, I mean, I'd be surprised if that is an industry expectation, but I think you're right. I'm not sure that is an expectation. I think it's on us as institutions to make decisions about how we support our customers and where we want to play. Make no mistake, the customers of banks are asking for access to this asset class. And it's on us to learn how to deliver that, to attract the talent, as you talk about, to make sure that we have clear strategic, alignment, to make sure that we have open and effective regulatory dialogue. And if you get all of those things right, I think that as an individual institution, you have an opportunity to play. Any institution who is not able to get those things right will really struggle.
Do you think you guys will engage more on an acquisition basis, more as an industry as a whole, right? I mean, if you look at retail and fintechs, right, you had the acquisition of Curve by PayPal, you've seen the acquisition of multiple different firms and from a technological perspective. Do you think that is the path in that most institutions will try to take? Or do you think that they will try to develop talent internally to be able to then compete?
So I think, I honestly think you'll see both. I think if you look at if you've got a essentially heavily VC-funded company that already has a war chest for acquisition, acquisitive growth is much easier. If you have a listed company that has a very steady performance over time, it tends to be oriented not towards acquisitions, and it has to grow organically.
Yep.
So it will be very much dictated by a firm's profile, their value to book, their aspiration, and also their ability to buy firms that are aligned with their values and their regulatory obligations. Right? I think that's going to be what drives that. I don't think there is any path forward which doesn't require education and talent development for traditional financial institutions. I know from speaking to my colleagues, other banks, that there is a vast difference between the person who knows the least about crypto and the person who knows the most. Yep. And finding depth of understanding of a digital asset space in a large organization is incredibly hard.
So this is the last question. At Fireblocks, we always say we've tried to find the anarchist in the bank. Right? Someone that has enough clout, right, to get things passed, but they believe disruption will be vital. It's hard to find that anarchist in the bank, right? It's people's jobs are at risk, et cetera. So for someone like yourself or for other banks in general, what's the biggest challenge that you foresee really building and scaling a business in digital assets?
I mean, it's interesting that you talk about that anarchist. I think that what I've enjoyed at Standard Chartered, and I see this at other firms too, but what I've enjoyed is it feels like there's different people being parachuted into the organization, and there is a good network of people across different parts of the business who have a depth of understanding of finance and banking and how it works, who understand digital assets and fintech, and who have kind of a creative spirit that can address challenges in different parts of the business. But I still think, like, for every institution, there's a push and pull. And while, if you can shift with enough anarchists, was the word I think you used.
Yep.
If you can shift with enough of that, enough creativity, you can move forward. But there is always the risk, like, of people leaving and of losing that kind of effort within a large organization, which kind of then puts a handbrake on that. So I think the more effective you are at building that network, retaining that network, and fostering that. And any senior leader in any financial institution needs to identify who those people are and create space for them to succeed in line with all of the requirements. I don't think and I'm going to use your term again, anarchist, I don't think that's at odds with being a regulated institution, with managing risk effectively. I think you can create really effectively interesting, exciting, and effective financial products and services within a regulated entity. I think you have to leverage tech effectively. I think you have to be efficient, and I think you have to be ruthless in prioritizing what needs to be done, and more importantly, what needs to not be done.
Yeah. Look, it was obviously a quick 15 minutes, and I appreciate you being so candid around the challenges that we're seeing, and thanks again for joining us.
Thank you so much for having me.